We just covered stock, and I'm talking to Dan Walkow, and Dan is with CBank Capital, www.cbankcapital.com. Did I get it right?
Yeah.
Okay. And you can get them if you're watching this from Sarasota, Florida, or Honolulu, Hawaii. You can get them at 1-866-541-9952.
That's correct.
And if you're in the Lower Mainland, give them a call at 604-541-9952, because if you call that 866 number from the Lower Mainland, it costs you 6 cents a minute for them to talk to you when it's a free call if they don't use the 866 stuff.
That's right.
Because that's what happens on this phone, too.
Yeah.
If you've got a question, you want to phone in and ask a question, you can give us a call from the Lower Mainland at 980-0321, or if you're phoning long distance, the same way, 866-980-0499. And Dan Walkow's the guy if you got a cross-border investment problem.
I guess the other thing too is
buying the house.
Yeah.
This is a big one, because this is this could be $7,000 to $8,000 difference.
Before we get on to that, just in terms of connecting with CBank Capital, if you're watching this on the internet or so forth at a later date, feel free to call the office.
Yep.
If you have a question, please dial the toll-free number. There's 4 of us there. If you have a question or whatever, and for whatever reason the time zone is different, you're in Eastern Canada and it's later on in the evening, leave us a message and just sort of some general idea what you'd like us to talk to you about or whatever, and we'll call you back the following business day. So feel free to call at any time and leave a message.
Okay.
Anyways, on to the real estate example. Call.
Yep. We'll see what's happening here. They say we just might have somebody with a tax question or an investment question. That would be cool. We got the odd one down here, and Rich is looking like he's going to push a button, so it must be a real question.
We have some audio feedback. Thank you very much.
Oh, we got a problem?
No.
Is that a sound problem?
Apparently.
Okay.
Where it's coming from.
Well, let's see if we can figure that one out. So we can go back on. Joe Blow's lost his job in Sacramento, California. He sold his house for $450,000. He's coming back to Vancouver. What should he do?
Call us. One of the things, obviously, if he's going to purchase a property in Canada, or if he just wants to convert the money to Canadian dollars, he's going to have to find some place to convert that kind of size in terms of money. But here's the things we can do. So you're in Los Angeles or wherever you are, you sell your house, you have, just for round numbers, let's use $500,000 US dollars, and you're coming back to Canada, and that's it. You're going to buy a property, Vancouver or whatever, ultimately down the road once you look around. So you got to get the money back, and you got to get it converted back into Canadian dollars. So you can call us. Well, no doubt what you'll do is you'll shop around, you'll call your bank, and you'll ask for a conversion rate, and how do I get my money to Canada, and all this kind of stuff.
Well, here's where a 1% difference can be $5,000.
Absolutely. So it's $500,000. So you call us up, and the bank will quote your rate, and I can, I guess I can say with a fair degree of confidence that we could certainly meet and beat most bank rates most of the time, and many times by a substantial margin. Like I'm talking 1%, 1.25% in some cases, David.
Okay.
And why is that? Because as a fee-based investment manager, we buy and sell at wholesale, not retail, is what your bank's doing conversions for you at. And because we don't take a markup on this, like the banks do, we trade the currency flat. We pass on that difference between retail and wholesale right to you. So on $500,000, you're absolutely right. It could be $5,000,
$5,000, $6,250.
Absolutely.
Or if you had a couple of $100,000 and you were deciding to go down and buy a Beaver motorhome in Sacramento or something or other, you can take your $200,000, get it traded, and come up with a 0.5%, 1% or something difference. Which it's not worth doing this for $10,000.
No.
But if you're into that $100,000 or $200,000 or $300,000. It's more than worth it and makes sense.
Well, that's right.
Okay.
A call about purchasing real estate in the U.S.
Oh, okay. Well, we just talked about that, so let's see if what the question's about. We've had 6,000 people talking to seminars I've been given with Mike Ozzie Jurok here. This is Ozzie's new book. I'll have to give you a copy of it.
Oh, yeah.
It's his new book on buying real estate, and there's 3 chapters in here on buying real estate in the States, and I happen to have done one on the taxation parts of it.
Right.
But I've had 6,000 people through seminars I've done on buying property in the States. What can I do for you, sir? Ma'am.
Hello.
Yes.
Hi, I'm calling. We were talking about your book right now. I kind of just missed that part.
Yeah.
I'm pretty green on this, and I'm looking at buying some property in the States as a Canadian. Now, I'm a first-time home buyer, and I'm doing this as an investment. And I'm hoping to get a property management company to rent something out. So right now, I'm talking to a real estate agent, and I've just hit a wall because I have a down payment, but there's no way to get a mortgage at this point in the States.
Okay. Let me make a comment to you.
Okay.
Everybody's rushing down to buy real estate in the States right now because the prices have fallen so low that there's this idea that they're at the bottom. And certainly Manhattan has started pulling back a little bit. There's 3 or 4 areas that real estate is improving in value. But you know, most of the places it's still going down. And I'm going to make a statement to you that we're going to come into the second round of mortgages. We've gone through the subprime mortgage fiasco. We're going to go through another round of the variable rate mortgages that are coming due, where the people's payments are going to double and triple and quadruple, and they can't afford them. So they're going to be forced out of their homes too. So unless you're buying a place for yourself to live in, as a vacation place, a place that you're going to use, I am not so sure that, or you're prepared to have what you buy go down another 10% before it comes up again, and you're prepared and you have the cash flow to do that, I'm not so sure that it's the time to buy. What do you think about that, Dan?
Well, I think the other consideration here in terms of allocating capital into the U.S. in general, whether it's real estate or other types of investments, is that there's a very real possibility we could see our Canadian dollar appreciate well through par this by the end of this year, and perhaps challenge the old highs of par 10 of a year and a half ago. So if you're converting money at 97 cents on the dollar to buy real estate, plus all the associated costs of real estate itself, brokerage commissions and the like, and you have 10-15% appreciation in the currency, and maybe, like you say, a 10%, just a mild downward move continuing in real estate,
be down 30%.
You could be down 25-30% within a year.
And I'm quite happy to tell you how to buy, make some suggestions where to buy. And I don't think it's a bad idea necessarily to buy, because you get such a good selection right now.
Yeah.
But if you're buying because somebody's telling you you're going to make a fortune, and you need the fortune and you need the money to make the thing work, it isn't the time to buy.
Yeah. I think it's an issue of time horizon. If you have the financial wherewithal to carry this investment for 5 years,
5 years,
at least, and with no intention of selling it, but again, you'll probably be okay, right?
Anyway, at this moment, and remember that's what I do as U.S. Canadian tax returns, at this moment it's fair to say I likely have 125, 140 people who bought properties in Vegas, they bought them in Cincinnati, they bought them in Boston, Detroit, Phoenix, Palm Springs, and so far everybody that I'm talking to, literally most of the time the values have gone down.